Hello and welcome and a wonderful good evening to everybody here in our webinar from Sabio Trade here on the YouTube channel at Sabio Trade. Welcome everyone. We are talking today about mastering prop trading from rules to results. My name is Frank and I'm looking forward for the next maybe 1 hour, 60 minutes, 70 minutes, 80 minutes. Let's see how long we are needing to talk about that. We are talking mainly about what is prop trading. We're coming immediately to the agenda, but I would like to also give you a feedback about or a spoiler about a strategy what we are going to learn together in the next couple of webinar series that we are providing here at Sabio Trade, and also giving you a little bit of spoiler of the materials that you can achieve by completing all five webinars that we are planning, because we are going from talking about what is prop trading, how you can talk or how you can make a business with prop trading, and also we would like to teach you a little bit about what kind of strategy you can use. As you might know already, in prop trading there is some boundaries about the drawdown, there's some limits, rules what you have to keep, and we would like to look at all aspects that you can have a strategy and as well keeping, while executing the strategy, the rules that you can bring your account when you're doing the challenge, that you can get over the challenge and get then financed or sponsored, getting a real live trading account with a bigger amount of money, up to $200,000 or euros. And from that profits that you are making, you get 80/90% of the profits. Sabio Trade keeps 10%, and this is a win-win situation for everybody. So this is a very short introduction. Let me switch to the slides. I will stay with you on the camera, in a small camera on the lower left side. If the camera should at any point of time disturb you during the presentation, please tell me. I switch the camera off, or let me say I bring in only the slides that you can focus purely on the content. But give me a feedback then in the comment. We have already people here. Simon is here. Hi Simon. Very warm welcome to you, and also Trace Andreevsky is here and asking if it's starting. I hope it started. So if you could provide me a feedback in the chat, if you can hear me well, if you can see me well, then it would be great. Then I know that everything is fine. I can see already on the other screen, I got feedback already that everything is fine, set up and running. I'm visible and listenable. So let's get started. I bring up the presentation mode, and I'm really super excited, guys, to be with you tonight and show you. I'm especially like very amused about it, that I can show you today actually the spoiler of the strategy, because the strategy is something special, I have to say. You don't see this everywhere. You see this here at Sabio Trade, and you see it only with me, to be very honest, or probably only with me here at Sabio Trade for sure, because we are talking about a trading strategy that is combining not only technical analysis and not only fundamental analysis. No, we are combining as well how traders are positioned, and guess what? We are different. We are doing exactly the opposite of what the traders are doing. And this is information what is very important in trading to understand. And only here in this webinar series, you're going to learn this. What I would like to mention you as well is that you see here on the slide my name, and you see use the code Frank. And this code is very important for you because you will get a discount. How big the discount will be, I will tell you at the end of the presentation tonight. And if you're gonna decide to prepare already for the next webinar, which takes place on the 15th of April at the same place, at the same time, and you want to prepare already to be ready for getting immediately active, I would recommend you use the code already now to bring up your trading account and be ready for the next webinar, when we are really deep diving into the strategy and learning how to navigate through the challenge. Okay, so let's get started. So what we are doing today is we're talking first of all about what is prop trading. There might be the one or the other of you who doesn't really know What is that? So this is what we are clarifying. We're talking about the importance of the drawdown limits, of the types of drawdown limits. There's two different types of drawdown limits we have to take care of. We have to definitely take care of that, guys, because if we don't do that, we will not be coming into the benefit of getting the real money and getting our well-earned benefits as well at the end of the trading period. We are developing a trading plan today with the drawdown focus, first of all. So we are talking mainly about that we are putting our strategy in a kind of a framework that we are not hitting, if possible, the drawdown limits. It can happen, especially in times of what we're having these days, really huge volatility. Sometimes in these volatility phases, it's absolutely great if you are positioned in the right direction, to be very honest, but it could also kill you if you are not taking the right risk measures in place. And guess what? I know what I'm talking about, because for me happened yesterday as well, that I got not killed because I'm still sitting here, but I also had yesterday a little bit of problems with the high volatility. The high volatility makes me really good trades, but if I'm getting on the wrong leg as well, it also costs me money. It happened yesterday, happened today, so I have to recover as well. And that's our business. That's our business. We don't need to lie around about that. There's losers, there's winners. And we have to deal with the losers. And guess what? I was really mad about that as well. I'm getting mad. I have emotions, as everybody has. But this is why as well the importance of today's meeting is, or why we are putting as well the risk or the drawdown limits, focusing on drawdowns on the very first webinar, because it's essential. It's essential to stay in the game. And this is also why we are having actually these tight boundaries, what you will see, what you will learn later on in the course. Okay, who is joining us today? Are you new to trading? Give me a 1 in the chat. If you already have some experience, give me a 2, that I know approximately how the experience level is in the audience tonight. Can just help, especially for the ones that are new in trading, because you could leverage, first of all, from myself when you give me the questions in the chat, or you could also use the knowledge of the experienced traders, because they might be answering you as well in the chat, and you can make connection as well to your peers out there. So if you're having the chat box open, type it in. I can see it here on my screen, and do it like Simon or Trace. I hope I pronounce you correctly, honestly. I'm not really sure. Trace. I say Trace. Please bear with me if it's not 100% correct. So guys, type it in. The best experience you get while having your phones turned off. If you're on YouTube and watching your phone, then of course this is not counting. Better is to watch it on a PC, but if you are on a mobile and if you are relaxed at the moment, laying on the couch or somewhere and watching from there, absolutely fine. Take yourself some notes, maybe, right? Writing down some thoughts as well, what is coming in your mind, writing down some questions, placing the questions immediately. I see we have with Pavel and Mikhail, 2 people in. They are new in trading, and Trace is new in Sabio, but has been trading for 3 years and slightly above positive. Congratulations to this. This is really a huge achievement. And also 3 years is a great time frame, honestly speaking, to get there. Everybody has to learn, right? And as we are doing it right now already, we are having a conversation, right? So actively participate, answer questions, ask questions, and that's really the best learning experience. If we get into a dialogue, we can leverage best from each other. I get to know what you want to know, and you get the answers exactly on what you want to know. Okay, Trace is liking Zabio. Me too. Oleg, and will stick to the success. Do that. I would really, I'm hoping for that you guys all are going to be successful in your journey here. And I do my very best to accompany you and giving you my experience, and you take out what you can use for your own trading, and maybe add something to your strategies. Trace, if you have already a strategy, maybe there's something in what is interesting for you as well to apply to get even a little bit more above positive, so that you are far above positive. That would be also great, and things like that. Okay, so continuing, who I am. I'm Frank. Yeah, 10 plus years of trading experience. Maybe I could make the number a little bit bigger still, but this makes me, this appears me then too old, so I'm pretty, I'm rather staying with the 10 years plus. No, I started actually trading in 2012, but really trading, like successfully trading, and I needed longer than you, Trace. I needed really 6 years to get the breakthrough. I needed until 2018 before I was really successful, or I was before already also slightly above zero, but to really get professional and to do this as a you know, as a main business, it took me longer, honestly speaking. And 2018, it was the time to do that. And I have to say as well, in 2012 when I started, I didn't have this opportunity here to join the live streams, to join the webinars, to learn from many experienced traders. No, it was the internet was already there, of course, but it was just at the beginning, the online trading, honestly speaking. And yeah, so I'm coming from a business informatics area. I studied business informatics. That means I'm programming, so I'm very systematic, I'm analytical, also in the trading world. So I'm trying to do the things very process orientated, and I'm developing as well a lot of trading tools, algorithms, indicators, and you will also see we have an adjusted template in the Sabio platform. When we're coming to the strategy, I develop reportings about trading sentiment and all these kind of things, and very much system based. And this is very important as well for prop trading. You need to be systematic, trading your system, keeping the rules in mind, keeping the drawdown limits in mind, and so on. So this is a little bit more background to me. You see here my website is in German. I'm a German native living in Czech Republic at the moment, and here and there these days you find me also in South America, but mainly I'm at the moment still in the Czech Republic. So let's get further. So Trace, thank you for the honesty. I'm interested to know your discovery, what you were doing wrong. My problem probably is the wrong size. That could be, yes. What I did wrong is, like, maybe to answer, to get onto this question, maybe first, what did I do wrong in trading? Maybe as many traders do as well, a big problem was for me the strategy hopping. So a strategy works until a certain time, then comes the drawdown, you switch the strategy, do the same again and again and again. And the thing is that you usually make the small profits, and then you start to draw down deeper, and as soon as you get in loss, you want to change something. And when you change then something when you are in loss, it's bad, because when you do this always, your account gets constantly smaller, right? I mean, you have phases when you win again, but then you get again the drawdown phases. And this was one topic. And secondly, I never really took care about the statistics in the beginning. And this is for me an essential part in trading. Your statistics have to be right. You can have a successful trading system with an 80% hit rate, but if you want to have an 80% hit rate, you should rather not plan with a risk reward of 2 to 1. It's very unlogic that it happens, because nobody really knows where the market is going. There is of course an edge for trading systems, and the edge is usually a statistical edge that you can work out. For some people it's the strategy, for some people it's the risk and money management, for some people it's like the market knowledge, for some people it's like everybody finds at some point an edge, a different setup. Let me give you a very simple example. If you are trading a very simple system, like you're taking the exponential moving average of 20 and the exponential moving average of 50. and you are trading it on a 5-minute chart, and you trade if the moving average of 20 is crossing the moving average of 50, and you trade the first pullback in between the two moving averages, you have a positive, a 10 years, it's over 10 years back tested from an independent institution. It was my first profitable strategy, and it has a positive edge, but it has drawdown phases that takes months. But as soon as you start to trade the second touch, the whole system turns negative. Even you have more or less the same system, but you do more trades. But if you trade, if you wait for the cross, we can look at this in the station maybe. Maybe let's bring up the Sabio platform here immediately. Let's do that. It's maybe good to watch it live so that you know what I'm talking about. So tell me, guys, if you are seeing the platform. Let's get a little bit practical. So you get the first strategy for me today for free. It's a very simple one. I need the 5-minute candlestick chart. So in that, I need, honestly, I need the indicators. I need a moving average. It's a trend indicator. You know what? Let's search. They have a very nice search here. So moving average. I would like to have the EMA 20. We said 20, okay? So I choose the thickness thin because I need still the 50 moving average. So I need another moving average, which is also the EMA 50. We make this yellow and we do it a little bit bolder. So now you see something here. And this is a perfect example, because everybody would tell me now, but look, the second touch works. Yes, the second touch works this time. But believe me or not, if you do this over a series of thousands of trades, you will have a losing strategy. If you are trading the first touch, and what I mean with the first touch is actually here. You see the cross? Here is happening the cross to the long side. And you see here the first touch in between the two moving averages. So you are trading this. And that's all. And then you wait for the next cross and for the next first touch. This is something that is profitable over the long run. Now let me not lie on you. I did it on the DAX, I think, the German index. This strategy works for the first touch, but not anymore for the first and the second touch. And this is one thing that traders have a problem with. And this is also one mistake I did when you were asking me about mistakes. I thought as well, I can trade also the second one. No, I can also trade the third one maybe still. No, I cannot. I have to stick to the trading system and trade it. Even then, if I'm coming in a drawdown phase, if I know that my trading strategy has a statistical edge. What I could do in a drawdown phase, we are coming to in the presentation. Let me get back to the presentation now. This was it not. There's not a presentation. Here. Okay. So let me tell you a little bit about statistics. This is very important, guys, in terms of your risk calculation, what we are doing right now. We are coming now to the spoiler of the strategy we are going to learn in the next couple of days. The next couple of weeks, next couple of 5 series. So we are having here losers in a row. We are having strategy with a hit rate of 40%, with 50%, 60%. And here we have a probability calculation. And here we have the maximum risk per trade to not destroy the account in the number of probable trades that can go wrong in a row. Watch out. This is not applicable for prop trading to have 7% for each trade, because the drawdown limit is 5%. So what we have to do is we have to divide 5% by the least probable amount of trades that can go wrong in a row. What does it mean? It means the probability of, let's go with a 50-50 system. It's the easiest to understand. In a 50-50 system, the probability that a trade goes wrong is 50%. You can win or you can lose. To have 2 trades in a row, we are talking about the risk of 25, the probability of 25% that this can happen. But be careful. You have 1 trade with a probability of 50%. The second trade also has a probability of 50%. So you need to multiply 50% times 50% and you get to 25%. This is why you are having a lower probability to lose 2 trades in a row. But 25%, ladies and gentlemen, this is a huge probability still when we're talking about trading. So if you're taking here too big of a risk, your account is blown out. We are still in the prop trading area, so we have limits. 5% drawdown limit a day. So never trade a maximum risk, right? But what is this numbering telling here on the green is when in a 50-50 trading system, it is close to not to, you know, how you say that? It's close to impossible, only close. The probability goes towards 0. It's not 0, it goes towards 0 that you are losing 14 trades in a row. Does it mean it cannot happen? No, it doesn't. Because this statistics, it's calculated in a series of 1000 trades. The probability that you are losing within a series of 1000 trades in a 50-50 trading system is 0.006%. So it's going towards 0. It's not 0, right? So for a prop trading, it would mean that if you know that your system is capable of delivering 50% of winning trades, you should be looking that your risk is approximately 0.5% divided by 14. Or if you want to be a little bit riskier, divided by 10. So take a risk of 0.5% because you know already that with 10 trades in a row to lose, the probability is 0.09%, is very unlikely to happen. So if you are, for example, trading 10 trades a day with a system of 50-50, you can be nearly sure, you can be sure by a probability of 0.09% that you are not losing 10 trades in a row. So your daily drawdown limit should not be at risk. This is what you should consider always for the risk calculation, knowing your numbers for the strategy and then calculating your risk. Take somewhere statistic, or if you don't have it yet, make an assumption. Make an assumption or ask the person who you have the trading strategy from if he can give you approximately the hit rate of the strategy and so on, so that you can make a guess how big your risk can be, that you are not necessarily jeopardizing the drawdown limit that much. Even better is when you are maybe not taking then 10 trades a day, maybe take only 5 trades a day, because you would then only risk with a 0.5% risk, you would only go with a maximum drawdown of 2.5% a day if all 5 goes wrong. there is a risk of 3% that this is going to happen in a 50-50 system. So it is possible that at one point of time you get it, but I would say it's unlikely to happen that this event is going to happen 2 days in a row. Unlikely to happen, very unlikely to happen, but at least like this we can plan. Like this we can manage our risk by knowing a little bit about our statistics. That's I wanted to show you a bit so that you know approximately how you can navigate through and define your risk. Okay, so next slide. Here is a little bit a spoiler to the strategy that we are gonna learn together. Look at these beautiful charts. What is this chart telling us? The weather in Czech Republic? No, it's not. This is the trading sentiment, ladies and gentlemen. The trading sentiment shows us how is the traders positioned in a specific market. And you see here a lot of forex pairs. You see oil, you see gold, and you see the German index, and you see as well the Dow Jones at the end. The naming is done in CFD language, of course, but is representing the DAX, is representing the Dow Jones, gold, and WTI is the US American oil. What you can see there is if the line is below the zero line, you see it's an oscillator. The oscillator is from 100% to minus 100%. Zero means 50% buyers, 50% sellers. Minus 50% is representing that you have more sellers in the market than buyers. Plus 50% is representing you have more buyers in the market than sellers. And now comes the trick on this strategy. Now listen carefully. Or maybe does one of you guys know how many traders are usually losing money? Give me a guess in the chat. I know that I have a little bit of lag time from my office to YouTube, approximately 30 seconds, so I'm waiting a tiny little bit to give you the chance to give me an idea what you think how many traders are losing money. I'm talking about private equity traders like you and me, right? So not about commercials, not about institutions, private equity traders, private persons that are looking for trading success. How much traders do you think are losing money? Anil gives me 90%. 75 to 85% are losing, says Henry. 75 to 85, 90%. Guys, what are you writing here? So many traders are losing money? Yes, it's true. Liaquat says 90+%. Wow, amazing. This is a lot. This is a lot of people losing money, and you guys are absolutely right. This is the statistic saying if it's 75 or 90%, to be very honest, it's not so much, it's a big difference, but both numbers are saying that the vast majority of traders are losing money in trading. So let me ask you another question. If you know that in the euro US dollar, since beginning of March, we are having more sellers in the market than buyers, and this is private traders here. Would you rather be on the buying side or would you like to rather be on the selling side? Considering the numbers, what Anil, Henry, and Liaquat was providing here, which are absolutely correct actually. In the European Union, where I'm sitting, the brokers have to name that numbers. And this is pretty much the numbers you are reading on these websites, honestly speaking. But how you want to be positioned? You know that in the euro US dollar, let me say 60-70% are losing, 60-70% are selling. What you would like to do? You would like to sell, or you would like to rather buy when you know that 70, 80, 90% of traders are losing money? Let's ask the chart. Let's ask the chart, and let's go here on a let's go on a 4-hour chart. Squeeze it a little bit together. And we were talking about beginning of March. I can even bring quickly to show you the real exact dates. Let me bring in. This is actually a tool what Sabio traders will have available soon. If they are following here my presentations, if they're staying with me in the webinars, if they're coming again and again, I will show you a trick how to get to this great tool. You see here, 4th of March, we were dropping below the 0 line. 4th of March. So now let's use here, but of course, let's use a graphical tool. Let's use a vertical line and put it on the 4th of March. And guys, I got this number in the morning at 8:30 European time. 8:30 in the morning. Here, let me still put a vertical line, please, to show you something very interesting. No, this is here, it's the graphical tool, sorry. This is the 4th here. This is the price. So in this very moment, I got an indication from the sentiment and said, hey, the sentiment shifted from too many buyers in the market to too many sellers in the market. So what I'm gonna do, I'm gonna buy. And if you look now, we were here at 105 and today we are at 112. So until today, 700 pips in my pockets. 700 pips. And never really have been in a loss until this time. Because you see, it's a great example. Honestly, I didn't prepare it. Give me another market and we make it ad hoc. It really works in many markets similar. This is not a 100% system, I tell you immediately. But it gives you an alternative ability to analyze the markets. So if you look in the morning, for example, today, when we bring it once more up, seeing, look at that, we are minus 50%. Wow, what a hell. We have still a lot. We have 70% sellers, 20% buyers. And what are you gonna do with this number? Say, hey, no way to short this market. Why should I? I'm looking for long opportunities. And of course today, yeah, would have been also possible to trade nicely long. Of course, you have drawdown phases, absolutely. Yeah, so there you can apply the statistics, the technical statistics, the technical analysis. Or I gave you before the first touch idea, right? So you got here a first touch idea. Why not to combine it with such an analytics? Simple. Keep it simple. And that's the message. So this is a little bit spoiling what we are going to learn as a strategy in the next couple of webinars. And now we are finally talking about the content that was planned today. But I think you guys are practical, like every trader is. So it was important for me to start a little bit with practice as well, so that we are not only talking about the theory and already giving you some really high quality content here in the webinar that you can think about a little bit in after the webinar, playing with the station, with the trading station, and so on. Yeah, so that you're not only hearing about what is prop trading, drawdown limits, and so on. Is everything super very important, but I know that the meat in the soup is the real practice world. Okay, yes, Henry, buy. Lucas, buy. Absolutely. This is exactly what we're gonna do, right? This is what we're gonna do. And Now we're talking about the basics a bit. What is prop trading? I could hear that many traders here are new, or at least the ones which were giving me the one before. I asked for in the very beginning. So prop trading is actually a great opportunity to start trading with real bigger accounts, which is not your own money. So there's a trading firm in the background which is providing you their capital for trading. This trading firm, of course, has risk management in place, and this is where the drawdown limits are coming from. And these firms have one idea. They say, I have money, I search traders that are great, that are good, and I give them my capital to earn money for me. Because I know that there's traders out there, they are really amazing. They have a great analytical approach, they have a great trading style. I would like them to work with my capital to earn me, and I would like to pay them for this. I pay them based on their success. Very much performance driven. Everybody in the company wants to be paid performance driven because everybody thinks they're working great. Here you have the chance with performance to really make huge money. Because you don't get only $1,000 on the account or $2,000. No, you get a minimum of $20,000 on an account size of $20,000 up to $200,000. And now imagine you're managing 2, 3, 4, maybe even 5 $200,000 or euro accounts. You are trading $1 million. And if you're making only 0.5% in the months of $1 million account, that's already quite a big money where you get 90% from and you can make a month's living from it. But as mainly we are doing 1, 2 or 3%, you can imagine what this means, right? So I could take now out even a calculator and tell you that 1% is 10,000 euro from $1 million. Probably you will believe me that. And if you get 90% from this, you are making 9,000 bucks a month. But, and this is the big but, you need to have the performance. And the trading firm is not giving you just because they're having the money to trade with. No, they would like to see that you are able to earn money and keeping risk management under control. They don't want to have people who are gambling. They would like to have process-oriented people, analytical people, and risk-oriented people with a moderate motivation to grow in the boundaries of the risk. And then if they're seeing this person is able to do it, hey, then we give you the money and you can trade with our capital, and then you should be as well be compensated absolutely like a king. 90% for you, 10% for us, and that's the deal. So that means you get an opportunity to leverage larger capital. You're getting a potential for higher profit share compared to a traditional employment. And you get access to advanced technology and resources. Advanced technology with the trading platform that is actually about to get really absolutely great. I like to trade with this, or I like to analyze and trade with it. There's so many things involved. When I just look at it here, maybe I can bring it in quickly again. You have everything, honestly speaking. You have informations available, right? You get technical analysis here included. Everything in one platform. That's amazing. It's a few clicks away, right? Easy navigate. You can check your trading portfolio. You can do everything. And this is what we're gonna also trade in the context of the webinar series. I'm trading it by myself, and I will be seeing if I'm able to get there. together with you guys, with the strategy I'm going to introduce to you. And let's see if we can capitalize this into real money, because you see here, this is an assessment account. So this assessment account needs to be transferred into a real account. And if we are in a real account, we are earning money. And what we need to do is we need to earn 10% by not risking more than 5% a day and having a trailing drawdown limit of 6%. What is it? This we are looking now at. This is also the role of the drawdown limit in prop trading is very important. It's a risk management tool, not only for yourself, it's a risk management tool for the broker and for the prop trading firm, especially because they're giving you the money from them. This is their own money. Of course, they would like not to draw down by 20, 30, 40, 50%. No, they would like to have a limit. Say, hey, no, you go not more than 6% down. This is too risky otherwise. Because we have to be fair, we have to share many capitals. We share a lot of capital out there. And that's it. This is why there is, it's important to protect their capital. It's also important that they see that you are disciplined. It's a kind of an early warning system. You know, it signals issues with a trader strategy or with your psychology if you cannot keep that. And it ensures that you stay long in the business, and the trading firm as well, the prop trading firm, that they can stay long in the business. It's very important. Think about it. Who of you has a driver's license and drives a car? You know the Alps? Or do you know the highways? Many people like to trade and like to drive in Germany because we have no speed limits in Germany. But it's like if there is a speed limit and you are just ignoring it, and then suddenly you enter the Alps, which are very curvy, and then suddenly you're having accidents all over the place. And this is something what should not happen. And this is why it is very important to keep the drawdown limits. We are having a drawdown limit which is called a daily drawdown limit. This is 5%. You see here a little bit of a sketch. You have the potential stop loss. So there you are really touching the line and you're out. And it's really hard. Should I tell you a secret? It happened to me already too, that I touched the limit. But please don't tell it nobody, right? I'm a pro trader, so it should not happen to me. But no, it happens, guys. It happens. This is life. This is trader life, right? So, but this is where we have to take care of. We should be not touching the 5% drawdown level. If we're touching it, we're out of the game. And to the top, it's open, of course. There's no limit to the wins. And this is also a very important message. Limit your losses and let run your winners. Very important sentence. You hear it probably from nearly every trader. Probably you hear it from every trader, but it's more difficult. It's much more difficult to let the winners run than to cut the losses. If you touch it, your account will be closed and you can go in a new challenge if you wish. Yeah, of course, this can happen, and it will happen as well to 80-90% of the traders probably. But I say always, okay, it happens. We do mistakes. All of us do mistakes. Maybe we have we made a typo in the position size. We did here a calculation mistake of the lot size, or we were just forgetting to put a stop loss. Something like that can happen to everybody. Then we have to not think about too much about what we did wrong. We have to just try it again. We have to stand up, shake ourselves, and try it again. And that's it. Of course, what should I say different, Anil? I mean, that's the way That's the way how the life is, you know. I mean, I'm also just a human. I make mistakes as everybody does. We just have to take care that the mistakes are our source of learning. This is very important, not only in trading, honestly speaking. It's probably in in everyday life that we do mistakes. We have to accept, and it's nothing bad. We should just try to avoid to do mistakes 2, 3 times or 4 times in a row, the same ones. We learn from them. Everything is great. Then we have the trailing drawdown limit. This is the limit that we should never get more in a drawdown than 6%, right? So this is trailing. That means you see it here on the sketch very nicely. You start here with the initial capital. So you go to 105,000. So then your limit is moving as well up, right? So then you go up to 112,000 and your drawdown floor is going to 105 up. It's always 6% below the all-time high of the account, the new all-time high, right? If you make a new all-time high, your drawdown limit is actually moving with you to the upside. And this is only, you can only control with the daily drawdown limit to stay there as flat as possible. And in best case, having losing streaks very small. That means as well, and we see this later in the strategies, that if you go in a losing streak, you probably have to reduce the risk even until you're getting again in a market situation that fits your strategy better. But this is something that we have to take care of. The trailing drawdown we have to special take care of because it's really moving with you, right? This is why it's called trailing drawdown. It's like, I could read here from Ioannis, the trailing stop loss. And this is something similar, like a trailing stop loss, right? The trailing drawdown. So be careful, this is 6%. So if you are trading actually with if you are actually trading with how to say that? With a portfolio. The portfolio should not get on 6%. You know, you have to keep really the overall drawdown in consideration anytime. Okay, next one. Let's go to the trading plan. I have to speed up a little bit. We're already pretty late actually. I see 50 minutes, or 47. But anyway, we are getting through. And if we need a little bit longer, no problem, guys. Then we do a little bit longer. The drawdown limit is crucial risk management tool in prop trading. It defines the maximum amount of capital a trader can lose within a specific time frame or overall before facing consequences. So what is your roadmap? What your roadmap has to look like? And maybe this is even something what I could, let me check that out. A roadmap. I have it somewhere with me, I believe. Let me check that. Because this is, I would like to show you a plan that considers everything. Let me open it here and I will show you this live. Okay, this is, for example, what I developed. This is also a tool what you will get, definitely. I make it I make it bigger that you can better see that. And I did it already here on calculation. Here, see a typo, it's a 20,000 because we start with a trade with a $20,000 account. And what you can see here is that we are able to plan the risk. We're able to plan the profit of our strategy. And we talked before about 0.5%. And then you can see this is the risk that we are taking at any point of time. If we are staying with the trade always at 0.5% risk, and if we are staying with, let me say, 1% profit, then you can see that after around 10 iterations, or 10 times reaching the next stage is not about trades so much. It can be stages. Stages can conclude many trades. But what does it mean is that if you are, for example, reaching a new stage, you take a break and wait for the next trading day. Or you say this is trades and you trade 10 trades a day, and if you are lucky and you bring all into the target, you might be already at reaching the goal. But be careful, this will not be happen. This is a 100% strategy, and a 100% strategy doesn't exist. So it cannot be 10. It can be 10 trades with a lucky coincidence that you have a 1 to 2 risk reward, or a 2 to 1 risk reward, and a 100% hit rate of over 10 trades is very, very unlikely to happen. But if we are saying, okay, we are making here 0.6%, for example, then you see you need approximately 20 trades or 18 trades. And if you make 1 or 2 trades a day, it takes you approximately a month until you reach the target. If you are getting there within if you reach a new stage every day. If it's weeks, it takes 18 weeks. 18 weeks, you're talking roughly about 5 months. I just would like to give you a little bit of an outlook what it means to trade with a very conservative risk management. And what also is important in this list, to reduce errors, I tried to get you to the point to trade with as little errors as possible, that you can here calculate based on the tick sizes your position size, or based on the tick number, the position size. Meaning, if you see that you need a stop loss in an index of 18,247 ticks, which would be $182, you can trade with this account size, with this risk, with this stop loss size. You can trade a position size of 0.65 Dow Jones contracts, DAX contracts, US 100 contracts, US 500 contracts. If you have a Forex pair, you want to risk 25% stop loss size, you can trade with this account size 0.4 lots, and you are shooting for $120 profit. You run away when you are getting on $100 loss. Okay? And if you reach a new stage, you see that the table is calculating you automatically the new position size, and always based on the tick sizes. Never mind if you trade an index, a crypto, a Forex, or a commodity. In this case, it's gold. It's specified on gold. That's exactly what you have. So, and if you say then at the end of the day, my account balance after the trading day stands at 20,325, then you see that your stage plan will give you a green light and gives you as well a possibility then to go for the next stage. So this list is not only a tool for trying to avoid mistakes that you are doing. No, it's also a motivation. It should be a motivation that you are working goal-oriented with a very tight, conservative risk management to stay in the boundaries that Sabio Trade is giving us. This is the rules that they're saying when you are fulfilling the rules, I provide you money. And this is designed for that it helps you to stay in the rules, that we can earn together, you and Sabio. That's actually the win-win situation. Good. So let's get back on the presentation. So that means what you need, and this you could see, a trading strategy, I spoiled before already. The risk management rule we were talking about, right? We are talking about in our stage plan. The drawdown management strategy, we are coming to this, Will. So that means you need to take specific actions to take when approaching or reaching drawdown limits. One strategy could be reducing the risk further. reducing the risk further and trying to get again away from the limits, right? That's one thing. You should have a performance tracking. We have also combined this in our stage plan. And psychological considerations. So what are you doing when you really get mad? What are you doing when you get really like super euphoric? Is also quite interesting to think about. Think about you have a winning streak. You make 5% in one day. You're getting very euphoric. Say, hey, tomorrow I manage the challenge. Could be a very, very bad idea to go so euphoric into the markets, thinking that you cannot lose, because then you are very much prone to make mistakes. You know, to feel overconfident. You might overlook to calculate the position size. You might think, okay, I know the market. It's doing the same as yesterday. You might take suddenly a trade where you have no signal for. You might go against your strategy. Something like this can happen, and bam, all of a sudden at the second day or a third day you are in minus 2% drawdown suddenly, and you are facing that you get closer and closer to the 5% or 6%. Damn, then we have really a problem, because then you get angry, mad, and then you try to make revenge trades and so on. So it can be really like a roller coaster you go through mentally, and there you have to think about what you're doing. Very important, thinking about that. You know yourself best, how you react in situations. Yes, of course, everybody can get a spreadsheet. When we are through with the series, when you learn the strategy, when you are with us in the Save Your Trade community, then everybody gets the materials. Not only the Excel template. No, you get also the access to the Looker Studios sentiment data, and this is everything what you can get, of course. Flow account, yes. Okay. Then integrating drawdown limits in your trading routine is some ideas what I put here together on the slides. Understand your limits. Yeah, understand the limits. It's very, very important that you understand the 5% and the 6%. Calculate maximum allowable loss per trade. Implement strict stop loss orders. Very important. Limit your losses, let the winners run. Manage position size. Avoid over leveraging. Yeah. Even when you have here a leverage of 1 to 20, 1 to 30, don't overdo it. Don't overdo it. It works in both directions. Of course, you can make in one day 5%, but you can do in both directions, minus and plus. So think wisely about how you do that. Especially we have now at the moment really big volatility. It can work for you. It can work against you. Yeah. So trade smaller during losing strikes. This is, for example, a strategy when you get close to the drawdown limits. Protect the drawdown limit. Take breaks when necessary. If you find yourself making that your decisions are not according to the strategy anymore, stop. Take a break. Go for a walk. Take a ride on your bicycle. Whatever you can do. Play a music instrument. Listen music. Watch a TV serial. Whatever you like. But do something different. Go for swimming, hiking. Many opportunities, but not spending time with the platform anymore in this moment. Just try to get down. Get calm, quiet. Review and analyze the losing trades. Always, this is the source of our learning. Focus on consistent smaller wins. This is a strategy I have to say I was thinking about. Should I write it? Should I not write about it in there? I would maybe even think about to reformulate this a little bit. Focus on consistency in cutting your losses sharply and trying to get break even fast, and then letting it run. Because also a big winner sometimes can serve very well. If we are cutting our losses very sharp, if we are trying to get break even very sharp, that's it. And have a drawdown protocol. Predefine actions you will take if you approach a certain percentage of a drawdown limit. Yeah, so what you gonna do? Reduce position size, stop trading for the day, waiting for a special setup, going for a swing trade, many options. But you have to protocol this down. Very important. I'm really not sure about leaving the trade run very long. Yeah, this is, it's true. I mean, it's difficult, especially in the short-term trading. It's like difficult to let it run very long. Then work with targets if it works for you better. In one of the next webinars, I show you as well some strategies that have or some back testing results from strategies, systematic back testing results, where you can see drawdowns, where you can see that what happens if you let run trades long. For example, you have also to consider always, if you let it run long, that you have a swap, usually overnight costs. Could be sometimes ugly, especially if you're at around break-even levels. If you are coming close to the drawdown limit, the swaps can shoot you over. Also, this has to be considered, of course. And yes, Johannes, this, when you trade 5% risk, of course, you do huge movements into the positive direction. But also, if you really let it run long, it could also get you out very fast. I mean, with a 5% risk, 20 trades, and you earn 100% if you trade linear. So, yeah, it's big. But I agree with you in prop trade that you could trade it, for example, in a very, very small account that is your own, that you are not trading a prop with a prop trading firm. I could agree with that 5%. In prop trading, I could maybe say that one trade is enough to get the drawdown limit during the day. Is a high risk. Is at least a high risk. But if you are right with the trade, you could be finished in one day with your challenge. Whereas I think there is also a rule that you have some active trading days, when I'm not mistaken. But this I have to read once more, very detailed. But I think you at least you could accelerate very fast. But be careful, it works in both directions. What I said before already. This is always the thing. Everybody, how he has the risk appetite. For me, if you wanna trade statistically, strategic, analytical, I think a 0.5% risk on such account sizes are absolutely appropriate to constantly make money. Because if you go with 0.5% and risk, let me say, and you're trading then later on a $200,000 account, then we are talking here about a risk for each trade of $1,000 if you take with 0.5%, right? That's pretty much. That's pretty much from money perspective, in my opinion. Because if you take 10 trades a month, you have and you make, for example, you have really the luck that you make 10 winning streaks to make it really very simple now. So you have already 10,000. So you get already 9,000 paid out. This is when you're on the real money then. Yeah, that's totally enough. But of course, everybody is their own risk manager. I can only recommend to take the risk limits serious and to really play with a lower risk. Always protect the capital. That's maybe the best sentence of it. Good. Going to the next slide. Integrating drawdown limits in your daily routine into your trading routine. Daily check-ins. Check every day your drawdown status. Real-time monitoring. Keep an eye on your open positions, potential losses throughout the day. In the end of the day, review your performance and drawdown. Identify any deviations from your plan. And if you deviated from your plan, no chocolate before you go to bed. Very simple. Right? No chocolate, no sweets before you go to bed and this day. If you have deviations, no. You get a sour pickle before you go to bed then, for example. So weekly, monthly review, analyze your overall performance, ensure you're staying within your maximum drawdown limits. And if you do all this, and if you all do this perfectly, and if you are able to keep all this, then when you make your weekly, monthly review, you are on a real trading account very soon, and you are getting the weekly payouts as well very soon. Because that means that you might be starting to get a profitable trader, and you might be starting a trading career with Sabio Trade. Watch out and watch all these positive examples, what are giving interviews to Save Your Trade on their YouTube channel. Very impressive interviews out there. Lately I saw a video from a trader lady. She moved to Italy. Is making now $500 a week. How amazing is that? She could fulfill her dream to move, to relocate into another country and having a job there already, right? She's a trader. She makes her bucks. She makes 500 a month, a week. It's 2,000 a month. Amazing. And there's many more examples. Watch out there. Stay on the YouTube or look into the channel. There's many examples out there. And I would be very happy if you are the next one who is giving such an interview. This would be really making us very happy. And here is the how to integrate the limits into your trading routine every single day, every single month, week, and whatever. And with the smartphones, you have even a real-time monitoring. Okay. Psychological aspect of a drawdown limit. Fear of hitting the limit. You get paralyzed by this, then you don't do a trade anymore. But this is the game. You have to go there for winning. You are having your strategy. You believe in the statistics. You believe in your strategy. You trade as it is every day without any excuse, or every other day, every time you get a signal. Revenge trading. You want to try to recover very fast. You get even worse than the result like that. Importance of discipline and emotional control. Sticking to your plan and managing your emotions is crucial for long-term success and avoiding drawdown breaches. Everything said with that sentence. Sticking to your plan. Managing your emotions. Managing the risk. By managing the risk, you manage your emotions. Because you know that you can maximum lose 0.5% a trade. And you know that you win 0.6% a trade when you win. So that means when you lose a stage and a stage plan, you know the next 1 or 2 trades you are up again. You might be even accelerating. And develop a resilient mindset. Understand that losses are part of the trading and focus on learning for them. Because what you always need to know about your trading system is your system expectation. The system expectation tells you exactly how much you make with each trade, independent if loser or winner. That means you need all your losers to be part of your trading statistic to reach the system expectation. And having this in your mind anchored helps you to develop this resilient mindset. Coming closely to the end right now, what are you taking with you is that the drawdown limit is a vital risk management tool in prop trading. It's not to make you angry when you hit it. It's a risk management tool. Understanding the different types of drawdown limits is essential. Why? Because there is a daily drawdown limit and there is the trailing drawdown limit. The trailing drawdown limit follows your performance. And again, it's true that it's a risk management tool because, of course, the prop trading firm, if you made them already 150,000, for example, from 100,000 to make 50,000 bucks, they don't want to accept that you drop again below 100,000. Why they should? And why you should? You don't want to afford not having income for the next couple of months. You want to earn as well every month, best every week even. You want to have a well-defined trading plan with a strong focus on drawdown management, which is crucial for success. Discipline, emotional control, and consistent adherence to your rules are paramount. Treat a drawdown limit not as a constraint, but as a guide for sustainable trading and sustainable income. Another key takeaway is that you should remember my name then, latest then, when you go to the Save Your Trade website and you are going and looking for your plan you want to start with. Because if you remember that my name is Frank, then you can give it into a promo code and you get 25% discount on the plan. And the very best is when we are finishing the webinar series, we are entering the month of May. And in the month of May, the whole trading course for what I'm giving you an introduction in the webinar series will be available in the platform, in the members area. And if you are a member of a pro plan, you will have all materials that I've shown you here, and you will have the whole trading course, which has even more details than the webinar included to guide you to your new career with Save Your Trade. Okay, so it's very crucial and essential you watch out in your emails when it's coming the next email invitations for your for this webinar, or you come and follow my Sabio's Instagram account, my Instagram account, Inflow Trade. You will find me in Instagram, for example, because we are also posting all invitations there. You should not miss out any of it, and especially not when it's going about that when the course is available, you should be one of the first ones who make it, because this is of course giving you an edge in sentiment trading, guys. Okay, thank you so much for your participation tonight. I open up for the last questions. If you still have any questions, please ask it now. And your discount is waiting for you with the code. Just my brain name, my first name, Frank, that's all. And you get a 25% discount on all the plans. And as said, in May, we will be ready with the course and everything is in. Any question from you guys that are still left over? Thank you, Trace, for the cool compliment. Thank you so much, and thank you for your participation, everybody. Actually, thank you so much. To be very honest, let me check if I can find that out. If I can find that out, how long this is valid. I will try to find it out. If not, then you know what, Trace? On 15th of April, we have a meeting again together. Until then, I know it for sure. Maybe I get it immediately now. Supplied, I think I get it even. It's valid for 2 months. Valid for 2 months. I got it now live here, immediately supplied. The promo code is valid for 2 months. And anyway, we have a meeting, guys, on is there a limit of profit to start withdraw? Not that I know, not that I'm aware of. And guys, if you make good usage of it, I'm pretty sure that Sabio has no problem to prolong the promo code. I think there's not a problem. I think we make good usage of it, and I think we are able to get a deal for you guys that we get it even prolonged. At the moment, 2 months, but if there is need, if there is a requirement, I think we can always talk about with the guys from Save Your Trade. Really cool team, and I think they're open for prolonging even. Okay, guys. Now we are finishing up here. Thank you so much. Thumbs up for you guys. Thanks for your patience. Thanks for your interest, for your great participation in the chat. Amazing, guys. I really love it to see so many comments of you from you here, and I already thrilled to come back on the 15th of April and talk with you in the next session, coming from the rules to the results here at Save Your Trade. Take care of yourself. Have a great evening. Have a great night, and see you soon again. Bye bye. Ciao.